Hi, welcome to the Market Alert for Thursday the 19th of March 2015. And starting off with yesterday's FOMC announcement, so you can see there from the Bloomberg headline that the Fed drops patient stance, opening door to June rate increase. So Yellen yesterday dropped the word patience from her rhetoric. She's been going on about for the last few months saying that we must be patient on the data before making a decision on increasing interest rates. So yesterday this word was dropped as a clue that there's a potential chance of interest rates actually going up at some point in the future, which we all don't need a crystal ball to know that. Of course it's going to go up at some point, the historic lows. So obviously they're still remaining cautious. The prediction now is for June. I don't believe it one bit. I think they're more likely to print than they are to actually increase interest rates at this time. All of the economic news is bad, but as you see from yesterday in the 5-minute chart, the market loved it. One word is dropped, as I say, from the rhetoric, and the market goes up 2,200 plus points, probably 343 to be precise, by the time we get towards the close there yesterday, just from dropping this word patience and leaving rates unchanged once more. So the effect is that the market seems to have resumed its bull phase. We'll see what happens today as we switch to the daily chart in just a minute. You can see there was a couple of trades beforehand, but like I said yesterday, I wasn't really interested because I knew the market was sitting and waiting for this news, and I again still can't believe that the market move is more or less based upon the fact that the Fed has hinted at a June increase in interest rates, which again I don't believe a single word of it. I can't see it happening. And dropping the one word, which is why I advised yesterday about standing aside and waiting for this nonsense to be out of the way before going back and looking at the markets. In the daily chart you can see this big move yesterday, 300 and odd points from the Fed announcement, but look at the volume. It's fairly tiny in comparison to when they brought the market back in this area here. And again, stopping the market here, the volume is far greater than yesterday. But it'll be interesting to see how the market follows through. It's got to close above the 76% retracement, which is from this high down to the recent low, the 18,122. A new all-time high could be on the cards at this point as well, as prices continue to move higher, and they could be assisted today in the news by the Philly Fed manufacturing index, which is forecast to come out at 7.2 over 5.2, so a 2-point increase. And if this is the case, then the market's going to seize on yesterday's momentum and move the market higher. So again, don't be surprised if that happens. So that's 2 p.m. If there are any shorts around at that time, then it'd probably be best to be out of the market, but it looks like the market could actually move higher. That's of course that the forecasted figures match, the real figures actually match the forecasted ones as well, and of course that's barring manipulation of the figures as well. So we'll have to wait and see what transpires this afternoon with this, but the implied volatility certainly taking note of yesterday's words, and you can see there 12.18 down markedly, and again you can see this in the charts heading back towards the 12% area. If we're going to get a correction in this market after the next up move, the implied volatility, the yellow line, has got to come back down towards the 10% area, and the blue line has to remain below it. And we've not really seen a precipitous drop off in the historical volatility, that's the blue line, yet, which we'll need to see before we have a correction. So at the moment the market is a buyer's market as well. Right, that's it from me today. All things being equal, see you in tomorrow's edition. As ever, thanks for watching, and see you in the next one.